Director, I want to hit you in on this as well. It's regarding residential, what you just heard from Mr. Lein, and expound, if you will, on residential, the market as it is now, how it affects business as you see in the future.
Yeah, absolutely. Just to expound on some of the data, the appreciation rates, the bottom of the market was in September of 2011 as far as median price. It has gone up 42% since then, or I'm sorry, 26% since then. In Arcadia, 42% since then. PV, 30% since then. So the appreciation levels are actually on the way up. So I'm encouraged by that. And it's obviously because builders stopped building and sellers stopped putting their houses on the market. That's changing. Building permits are up over 60% from March to March, year over year. So the inventory is starting to come back around. As far as long-term, looking at this long-term, I'm optimistic. If you look at our freeway system, freeways drive development, if you want to go that way. I mean, for shopping centers, for apartments, for all sorts of things, and housing. And our freeway system, if you look at the development around that, has not been built out yet. We have plenty of affordable land for home building. If you look at places like New York and Connecticut and other places around the country, they don't have that type of affordable land like we do. So I think our long-term outlook is very optimistic. And I don't think things are going to spike. We don't want to have a spike like we did in 2005, 2006, because I think sellers are going to start to see the appreciations levels and start putting things back on the market, and the inventory is going to come back slowly and steadily.
Some would suggest, though, that the spike and some of our real estate problems, obviously not all of them, that investor activity was involved to a certain degree. How do you see that? Because obviously, folks that are buying with cash right now, a lot of those folks, that's not homeowner occupied. That's investment activity. How is that playing on the market?
Well, if you look at it, everybody has to have a place to live. There's some people that cannot buy a home right now because they were foreclosed upon or whatever, and so they need a place to rent. And so that's fulfilling a definite need in the marketplace. 34% of our transactions since the beginning of the year were cash. So we're seeing fewer investors come into the market that way. We're seeing more and more regular sales. So it's starting to even out a little bit. But that investor market was a necessary market for people to be able to rent something.
The reality is that because of the number of foreclosures and short sales that have occurred over the past 2 or 3 years, there's an incredible base of individuals that even if they wanted to buy a home would not be able to qualify because of the taint on their record. So the investors have absolutely filled a necessary need in the marketplace, and most investors do not keep their property or their investments forever. At some point in time, they'll discover that their return on equity will justify selling their homes, which will come back into a market that's predictably going to be very, very short in product availability.
Please.
If you look at some of the fundamentals, they're very powerful. You look at the number of jobs created last month, 46,000. That's half as many as the whole nation created the month before. On the crime statistics, the peak murders that were committed in Phoenix were 240 a year in 2006. That's down below 100. The DUI fatalities is down by 33%. Just generally, we've, over the last 3 years, had to wash out and deal with a number of dynamic situations that are now under control. We rank in the top 15 in migration from other states. That promises to power up, and it looks with the attractiveness of the housing industry. That's a part of it. The foundation for business in Arizona is very powerful looking forward.
It is, and the employment figures also, I think, are encouraging in that it wasn't all construction jobs. 25% were in healthcare and hospitality. So, it's more diverse, as you were suggesting it should be.